Why would a business lease equipment to itself? My name is Merrill Taylor with Tax Tutor. If you enjoy this video, please hit the like and subscribe button below. So here we have a common structure that I run into with clients. Let's take one of my clients. He owns a State Farm insurance company, right? So he has his State Farm insurance company inside of an S corporation. And that's where he runs that business from. He brings the income in from the business, he pays his staff, he does all that sort of stuff inside here. This is his operating business. Now, he happens to own the building that he runs that business from. So he has the option of owning that building inside of his operating business, or he can own that building outside of his operating business and then lease the building back to him. So why would he do that? Well, the short answer is it's a legal liability issue, and I'm not an attorney, so I won't get into too much of the specifics about that. But basically, it helps separate the liability. So if you have your business that's over here that's operating, and somebody sues your business for some sort of reason, and your building is in that business entity, well, guess what? When they sue you, they now have access to that building, maybe the equity in the building or something like that, or they could get that building from you in some sort of way. Or let's say that you have the building in there and somebody trips and falls, maybe some accident or something happens, and now they sue you as the building owner. And since the business is located in the same entity as that building, well, now they're suing the building, so they now have access to the business and all of its capital and its income flow that comes from that as well. So to help separate that out, people will normally put their operating business in one entity and their building or their assets into another entity. They then will lease those between them. So the operating company will pay money to lease or to rent those assets, and then the leasing company will in turn allow the operating company use of those assets, use of a building. This can also happen with tools. If you have a lot of tools in, say, a construction business or something like that, where you can have the tools in one entity and then lease them to another. It's also a helpful structure because if you have, say, an operating entity that's a corporation, say it's an S corporation to help save on some employment taxes, well, having a building located inside of an S corporation is a really, really bad idea for tax purposes. Because if you ever want to take that building out or something happens inside that entity, when you distribute a building or an appreciated asset out of a corporation, it's a taxable event. So you pay tax on that. So having a building over in a partnership or a single member LLC or some other sort of an entity that's not a corporation is a really, really good move for taxes because it helps to separate that out. Now, when it comes to having these running together, you can actually make an election to treat those as one entity, as one purpose on a tax return. Because the problem that we run into is that when you lease or when you rent, say, a building, then that activity is inherently passive by nature. And we run into all the passive activity loss rules and all the issues that surround the passive type activities. So we do an election where we treat those as one business unit together, and now for tax purposes they're all put together, but for legal purposes we have two separate operating entities, and we keep that liability protections and those things of that nature. So this is just a really common structure that we see. I get a lot of questions on this. Attorneys will recommend this to clients, and then clients always ask me, what is the tax impact of that? To be honest, the tax impact is very low, because what happens is this operating entity is going to pay money over to this entity here, and then this is going to provide the building, we'll say building rent, we'll put here. So we have the money coming over here, and then the building rent going over there. So the operating entity will recognize a rent expense, and the leasing company is going to recognize rental income. And then the leasing company will, depending on how they set it up, The leasing company could then recognize all the expenses such as property taxes and the utilities and all the other expenses, or they could set up a lease between them, say like a triple net lease where the operating company pays all those expenses themselves, and then the leasing company just recognizes income and records depreciation for the building. So there's a number of ways to set that up to make it advantageous. However, as you look at it, if you were to just combine all those and put them together, rent income, rent expense in the operating and rental income in the leasing basically cancel each other out. So by the time you get to the personal return, there's really no difference between those two. Some people look at it and say, well, now I'm recognizing income on the lease, and now I'm recognizing double income. Well, that's not the case because you have a rental expense over here. Some people will look at it and say, hey, that's great. I'll lease the building to myself, and I'll get a deduction at the business, and then I don't have to pay tax on that. Well, that doesn't work either, because when you rent something, you have to recognize the income on it. So ultimately, the rental expense in the operating business and the rental income in the leasing business cancel each other out, and you're just left with the actual real expenses that you would normally have by owning that building. So it's not really a tax play, because by the time we get to the tax returns, everything would be the same as if this structure didn't exist. It's really just a legal play to help keep you safe from liability and give you some protections that way. Yeah, if you have any questions on that, please comment below. And if you like this information, hit the like and subscribe buttons below as well.